Okay, Patrick, the great rate debate. Why are we going to do this segment? Well, it's because GDP had a surprise, which is everyone's been talking about how GDP is going to decline, and the first quarter GDP has come out higher than expected. Now, you got to look behind the curtain on that, Patrick. You got to go behind the headline, which you will in a second. But this surprised people, and as a result of that surprise, the very first thing everyone jumped to is, we're going to see another rate hike, and it's coming up, I think, on June 7th, the decision. So now everyone is scared. Shoot, we're going to increase rates again because GDP is doing better than expected. We're going to increase rates, and that's kind of freaking people out.
Yeah, and when we look at GDP number, again, it's a lagging number, and so you have to look behind the curtain of what made up that number. And certainly, as positive as GDP was, it was a surprising positive more than, but ultimately it happened primarily in June. Almost all of it, as a matter of fact, was in June, or sorry, June, wrong month. January and February, March were pretty flat months. So we have to look at, is the economy actually slowing? But it gives you the impression that it was a good quarter. And ultimately, when you look at the number, yeah, okay, it's a good quarter overall, but we started to see the trend down. So we have to look at that. Having said all of that, JG, I'm still looking into those, you look at those leading indicators. I see a slowdown in the economy for sure. When we look at what's happening in manufacturing, in building, we just had that conversation. We can start to see and anticipate a slowdown, but I'm not seeing as many people continue to call recession. I'm still not there. And as you know, I've kind of been a little bit hesitant to say that's where it's going. I'm still not seeing it going there. Really hard given the number of people coming into the country. That in itself supports an economy.
Yeah, it's fascinating, Patrick. And I will tell you this, and this is those are the numbers that Statistics Canada publishes, and that's fantastic, and that's always weighs into my decisions. But I also really I lean pretty heavy on what I'm experiencing in the market because of our businesses, Patrick, and my broad businesses. I mean, I own a marketing company, I own a property management company, I own a property development company, I own a spa. So I actually see a pretty broad sector of the economy in terms of people's, discretionary spending in my spa. I see people's, business spending at my marketing company. I see real estate investors and so on and so forth. The point is, I have a pretty interesting view of the economy around me, not across Canada, only where my businesses operate. And I'm telling you, people are scrapping right now, and people are not living and not working on the froth that they did during COVID, meaning they have to work for it. They're out there, they're hustling, they're selling, they're growing, they're scratching in order to make it happen. But I'm not seeing major cuts, man. I'm not seeing people doing any major cuts and saying, cutting big spends, cutting big budgets. But they're saying, listen, we have to tighten our belt a little bit, but we have to work harder. That's kind of what I'm getting from the general sense. And I can feel where I do business. It's busy. Like there's a lot of people, calls, emails. Like people are really, going back to what it was like pre-COVID. And I don't like to kind of keep referring it back to that. But my point is that stuff that had stopped happening, just like touching base with clients, touching base with various business partners, all of that is coming back. Hey, let's grab a beer. Hey, let's grab a coffee. Hey, let's talk about a project, and let's do people coming up with innovative solutions to their problems. I'm getting a lot of that, and we had lost a lot of that through COVID. So anyways, that's my 2 cents on it.
Yeah, I think it goes back to what we've talked about before, which is, discretionary spending is going to depend on what income level you're at. So we see discretionary spending when you look at your spa, for example. There's a certain I guess financial benchmark that you hit before you're prepared to spend that money on a spa. So you're dealing with that kind of upper 50% of income, whereas below that they're being far more I guess, conservative with their spending. And, like I've got a high end retail store. So we're seeing that store do exceptionally well into that income level. So it is, you have to look at it. The disparity between income levels is more, I think, apparent than it's ever been in the past. And that's partially because those in a lower income don't have access to the credit that they had in the past, or they may have access to it, they just can't afford it. What we are starting to see, however, is some credit card debt go up, and the overarching debt or the overall debt isn't continuing to increase, which means people are borrowing to pay. So, it's hard to say where that part of it is going to go, but I think that you're right. Businesses that are being savvy are actually paying attention and being more relational, getting back into the trenches of actually selling, connecting with clients, and grinding it out. It's a much tougher sale than it has been in the past.
Now, this leads us to the question, the great rate debate. What are rates going to do come early June, Patrick? What is your prediction?
Well, the fearless forecast that I put out in a different forum, but in the public, was that they're going to remain the same. I mean, ultimately, I don't know. I really can't second guess Tiff Macklem. Given what they're doing, you look at this positive GDP. They know what's going on behind the scenes. They know that it was just January. We've got low unemployment. We've got inflation, but they have to look at it and go, most of that, or a lot of that inflation number is because of food, for example. You can raise the rate. People aren't going to stop eating. Farmers still have to buy fuel. Oh, by the way, fuel continues to increase in price. Interest rates aren't going to bring that down. We look at the interest portion of shelter costs. That is, you up it up. Okay, go ahead, increase the rate, and then of course we'll see inflation go up again. So it makes no sense to raise it. I know a lot of people are going, we got to slow things down. We got to slow things. I disagree, and I don't think that raising rates is going to change a thing when it comes to inflation. Not now.
This narrative people have bought into that we have to slow things down, I find it quite fascinating. Like who the hell says we have to slow things down, and who the hell believes that shit? I just find it fascinating that people in general want it to slow down. That just makes no sense to me. I'm thinking we got to speed up, not slow down.
Yeah, and I don't know what to say about it. There's, when we've got the unemployment rate is where it's at. Okay, so first and foremost, lots of people are working. That's good, and I get that some of them are working 2 or 3 jobs. Understood. We've got a huge amount of immigration coming in. I've talked about this for 2 years with this immigration coming in. Immigration is going to drive the economy and drive inflation just in that huge amount of people coming into the country and spending money, getting setting up house, doing all the things that they are. And ultimately, that's another part of it. So when we talk about recessions and we need to slow things down and all of the narratives around, that's why we want to increase interest rates. Man, it's hard to see a recession, number one, just given the amount of people coming into this country. That in itself is driving, the economy in many, many ways. Again, I'm just going to go back to what I've said all along. You can increase interest rates, and they might another 0.25%. Some are saying for sure. Some are even saying there may be 0.5%. I don't know the answer to the question anymore, to be quite honest with you. I just know that I don't see it slowing down an economy. You raise it enough, you'll crush the economy. That would be one solution, maybe.
I'm going the opposite way, Patrick, only because I'm a contrarian. And so what I always do, they're going to cut rates. I think they're going to cut rates by a quarter basis point. Get ready for it.
Get ready for it.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.